If you had invested $100,000 in Tesla 2 years ago, it would have grown more than tenfold to $1.2 million today. If you're not an early investor, you're probably wondering if it's too late to invest in an electric vehicle. Pioneer, one of Tesla's experts, revealed that it is not too late. Now is the best time to buy. Tesla. Is buying the stock still a good idea? The majority of investors and analysts believe that Tesla will continue to increase its car deliveries, which means that the company is on its way to becoming one of the largest automakers in the world. Why is now the best time to buy Tesla stock? What does the future of the brand look like? Let's find out. Tesla was the first electric car manufacturer to go public in 2010 using the Nasdaq platform. Tesla priced its stock at $17 per share using an IPO campaign, valuing the company at about $2 billion. Tesla has since initiated a 5-for-1 stock split that took place in 2020. As a result, the original IPO price should be considered around $3.80 per share. If you had invested in Tesla's IPO in 2011, you would have made a huge profit. After that, Tesla became one of the best performing stocks of all time, as we all know. While some experts say the company is expensive due to its high price to earnings ratio, others believe it has a good outlook for growth and earnings. Dan Ives is one of them. Since 2018, Daniel Ives has been a managing director and senior equity research analyst at Wedbush Securities, focusing on the technology sector. Dan has been covering the software sector and the larger technology sector on Wall Street for nearly 2 decades, and as such, we consider him an expert on the subject. Ives has been positive about Tesla, claiming that the rise in energy prices caused by the conflict in Ukraine, among other factors, will be a major incentive for the company and will lead to increased adoption of electric vehicles in Europe. He also feels it's a strong position in terms of manufacturing, and has noted that Tesla is at the forefront of the electric car race. Timing is crucial in the stock market when looking for stocks to buy, and it is crucial to conduct fundamental and technical research that reveals low-risk entry points with high potential rewards. So is Tesla stock technically a good investment? Tesla is climbing on the right side of the cup base with a buy point of $1,208.10. The stock's 50-day moving average has been restored. However, the relative strength line is still far from its previous highs. In simple terms, the stock is back on the rise, but it looks like it is going higher, so it has good potential. Despite its rapid development, hyper-oriented investors are naturally wary of Tesla, which has a market capitalization of $1 trillion. However, the stock has so far defied typical valuation standards. The main question is whether it will be able to do so in the future. While no one can definitively answer this question, we tend to say yes. Other variables, apart from high volume margins, could help Tesla's valuation in the future. The automaker's full self-driving feature, battery technology, new factory openings, and, most recently, a pending stock split are also potential factors. Tesla seems to provide investors with a constant stream of news, but a recent Securities Commission filing surprised many. The company is preparing for another stock split less than 2 years after announcing a 5-for-1 stock split. As stated in the filing, the company intends to obtain shareholder approval for the stock increase to allow for a split of the company's common stock in the form of stock dividends. According to Wedbush analyst Dan Ives, Tesla's planned stock split is a show of strength by the electric vehicle producer that will likely spur investors to buy more shares. Stock splits generally have no impact on a company's valuation or underlying operations. However, they can be an indicator of management confidence. In many cases, this translates into stock gains. So why buy Tesla shares now? Tesla is planning a second stock split, which will allow it to start paying dividends to shareholders. As we mentioned previously in this video, Tesla shares have more than doubled since the previous 5 splits, which is especially important from an investment standpoint. As a result, there is a lot of pressure on Tesla shareholders to support the split, especially given how effective it was in valuing the company last time around. It's important to note that if you think Tesla shareholders will support the split, you should buy shares before the official announcement. This will allow you to buy Tesla shares at much lower costs before the broader market reacts. Ive believes that regardless of whether another split is announced, there are more reasons to buy the stock now. He said you shouldn't buy stocks just because of a split. You should buy because you believe the company will go in the direction you expect. The future looks bright for Tesla, and experts see the stock rising as the electric vehicle brand dominates the industry, which is exactly the trend investors are hoping for, according to experts. One of the crucial factors to analyze before buying a Tesla. Stocks are the company's vehicle delivery numbers. This basically means looking at two key numbers: the number of car orders Tesla receives from customers and the rate at which the company can fulfill that demand. Tesla has significantly increased its manufacturing capacity, and over the next 10 years, Musk hopes to produce 20 million electric cars. This is more than double the current production of other auto giants. As a result, it seeks to significantly increase its production capacity. Now that Tesla is producing cars in Germany, it will compete in the electric car market with three famous German brands such as the Volkswagen Group, BMW, and the Mercedes-Benz division of Daimler. In addition, Tesla has become increasingly profitable. In 2021, the company's total revenue exceeded $50 billion, and it generated approximately $5.5 billion in net income. It's also not difficult to see how the company has achieved this profit over the past 3 years. Tesla has steadily increased its gross profit margin. There is also no escaping the fact that at some point in the future, more people will drive electric cars than traditional gasoline-powered cars. Many governments, especially in Europe, have already announced a ban on sales of new gasoline and diesel cars by 2030. This will naturally open the way for electric car makers like Tesla. As a result, the demand for electric vehicles is already increasing at an astonishing pace. Experts believe that this is the best leap in the conquest. Now that things are starting to look up, many believe that another reason to consider buying Tesla stock now is that the electric car manufacturer continues to outpace its competitors. For example, fellow China-based electric car company NIO lost 40% of its value last year compared to 78% for Tesla. Then there's Rivian, a US-based electric vehicle company, which has lost 64% of its value since its IPO in November 2021. It's also worth noting that traditional automakers like Ford and General Motors are investing heavily in expanding their electric vehicle divisions. Financial expert Dan Ives seems unfazed by this. Right now, at least in EV land, it's really a Tesla world and everyone pays rent, he said. The main concern for investors who are still on the fence about Tesla seems to be the company's value. Tesla bears make this case for several reasons. First and foremost, it's unclear how Tesla will reach market capitalization when its first full-year profit was only reported in early 2021. Tesla has been losing money for the past 13 years. Furthermore, while the price-to-earnings ratio alone cannot indicate whether Tesla is likely overvalued, it cannot be overlooked. Tesla has an extraordinary price-to-earnings ratio of 222 times right now. The easiest way to compare a company's price-to-earnings ratio is to look at the broader market and its primary competitors. The combination of strong demand and Tesla's dominant market position should help the company's profitability continue to increase, although Tesla has the ability to set its own prices. While many companies are grappling with rising raw material and transportation costs, Tesla has already announced price increases in the US and China. In fact, the prices of many vehicles have been raised twice in the past month. Whether the company gets approval to increase its shares or not, there are a lot of positive developments underway. While another stock split may boost shares in the near term, the long-term results will be determined by the company itself. Tesla will benefit from growing global demand by increasing production at 2 new facilities. Whether the stock splits or not, it has proven to be very profitable, and that is what investors should focus on right now. Do you agree with Dan Ives? Is now the best time to buy Tesla stock? Leave a comment below.